Great. Um, hey everyone, welcome to another ClimateLink meetup. I, along with Hitesh and David, my name is Ravi. I'm one of the three co-organizers, and we're so excited to welcome Annie Baldwin, who's the Director of Product Management for Form Energy, who Form recently came out of stealth earlier this year. So we're really excited to learn about how they're taking Rust and making multi-day storage. So not long duration, it's a multi-day, I believe, is the term that they're pushing. And I think that we should all probably switch to. So if I could see, I mean, if there's show of hands or just for how many people is this your first meetup? You don't have to come off video if you don't want to, but just put in chat. Always like to know, yeah, who's here for the first time or who here has been here for many times. So this is now a almost 5-year-old meetup. Started it, wanted to really build the communities specifically around the Bay Area to support, and we're seeing a disconnect between startups in the clean tech and climate tech spaces, connecting with the right type of capital. Everybody would read a green tech media article and go to the VC that was named there, even though that their technology was not yet at the commercial readiness level, so they needed philanthropic or government capital. So created ClimateLink for that purpose. Gosh, let's see, why won't this move? There we go. So the whole purpose of ClimateLink is to create this network, and that is self-assisting. And so, if we say from your inspiration to IPO, from Eureka to exit, from cradle to cradle, how do we sort of help every member and entity, every node in the network, sort of move forward along this continuum of both time and development, and make those connections along the way that are most beneficial. So we do these meetups. We make connections for investments, jobs, even love matches. We've had one marriage. I'm hoping for a second one so that I can say that, not just reuse the same couple every time. But yeah, wanted to be of benefit and of interest. So if anybody is hiring, please post that in the chat, and we can also talk more about that after our talk. The ClimateLink meetups are now sponsored by Atmos Financial, which happens to be my startup. I've been in the climate clean energy space for 21 years, switched from working on energy generation technologies to capital deployment. And so Atmos is a banking startup. It is the most we're working to build the most climate positive banking experience on the planet. So 100% of your deposits go to fund solar, electrification, storage, soon regenerative agriculture. And this slide is now wrong because we pay up to 20x the national average on savings, and 5%, up to 5% cashback on debit card purchases, like for EV charging or community solar. So please sign up and don't have your money fund fossil fuels, which basically every single bank and credit union does, because they still fund combustion via home loans or auto loans, even if they don't fund extraction. If this is first time to a Zoom meetup or networking type event, please keep yourself muted unless you're speaking, and ask questions in the chat box and use the raise hand feature, and we'll call on you to ask your question when we get to that. And then also introduce yourself in the chat, drop in your LinkedIn or email for people to reach out if you want to connect with others, and also share what you can offer and what you might need. It's like if you're hiring, if you're looking for a job, if you're raising capital or investing, let everyone know so that we can help each other out. Also, David kept this in. I almost took it out, but he's real cute. So this is my son, was just born 10 weeks ago. And like Ravi, Adi it means the primordial, and it really talks about the primordial light of the sun. So we have solar names, and he's the latest climate warrior in the ClimateLink network. So he may join at some point. Also want to talk about a lot of greenwashing that's been going on. This was at TED a few weeks ago in Edinburgh, where the CEO of Shell was brought on stage and was basically allowed to say how much they were committed to the transition, but that they needed to make all of these invest in new oil and gas exploration in order to, in the future, have profits to then invest in renewables instead of taking their existing $3+ billion in net income every quarter and investing that and doing no new projects. Woman on the right is Lauren McDonald, who's a young Scottish climate activist and the leader of the Stop Cambo, which is the offshore oil drilling. And there was a lot that went on at COP26 as well, that just ended in Glasgow. So I know everyone here is very dedicated and just to hold those that are in power accountable for what they say, so that we match our actions actually live up to the words that we say. I think I saw somebody raise their hand several times. If you want to, do you have a question right now, or do you just want to get in line for Annie's talk? Tiger? Let's see. No, not yet. Okay. So we're recording this talk. If you'd like to not be recorded, you can stay off video, also audio. And we post them to YouTube. So we have a YouTube channel. So if you go to this link, bit.ly/ClimateLink videos, all lowercase, that will take you to our YouTube channel. We just posted last month's talk, which was on EV charging innovation. Haven't written a newsletter in a while, probably going to be a little while before I start writing those again. But if you have jobs, post them in the chat. We're still working on a year-end event. It will probably be, we're thinking about some sort of weekend potluck afternoon, so there's daylight, so we can play games and get together. If you have ideas, please reach out either via email or share in the chat. And then we'll resume Tech Talks in January. So without further ado, I would very much like to introduce Annie Baldwin, who is with Form Energy, who's going to tell us all about their iron oxygen, the iron oxygen battery that they've created and that they've developed under stealth for many years and are now introducing with, I believe, 162 hours of potential runtime. Is that correct? Well, anyway, you will correct everything that I said wrong. So Annie Baldwin, take it away.
Sounds good. Thank you. I'm going to go
trying to remember everything that I read before. And
yeah, no worries. We are building, well, we'll talk about it a little bit more, a 100-hour battery as our first commercial product. There's a lot of numbers out there. So we can talk a little bit more about the why for that piece.
I'm just boosting you up. I'm boosting you up.
I love it. Well, it's an enormous pleasure to be here. Thank you so much for having us, just to chat with you guys. Just for myself, I've been a climate geek for a long time, really thinking about how can I be part of the overall clean tech transition, and what are the types of technologies that we can really deploy to enable a fully renewable, fully clean future, which is how I really landed up at Form. So today I'd love just to share with you guys a little bit more about our company and our product and where we see the market and opportunity going to build fully renewable grids. So just a little bit about Form. We were started in 2017, so 4 years ago, with the opportunity and vision of what does it take to enable a fully renewable future. Since then, we have 5 co-founders who kind of came together and bringing many different ideas about how to do that. And since then, we've grown to just about 200 folks across the US. We have one group that's based up in Somerville, Massachusetts. That's where these photos are from. That's where we do all of our cell R&D and development work. And then we also have a Bay Area office out here in Berkeley, where we do all of the module and systems development effort as well. And then we also have an office location in Pittsburgh, Pennsylvania, where we do manufacturing. Form is very lucky to have investors who really believe in what it takes to build a fully renewable grid and the types of investment and kind of long-term view that it really takes to do that. So earlier this year, we announced our Series D fundraising, which is a really big deal, led by ArcelorMittal, one of the world's largest steel suppliers. I'll explain more about why that's relevant. But basically what this means is that Form, we now have kind of the resources and capital to go out and go and tackle very, very hard problems. So when we think about what the problem space is, and this is really where Form started, was, what does it take to really retire all of our thermal plants that exist in the grid today? So even if you look now at what we expect grids to look like in the future, you do see some very promising and exciting trends, which is very, very low costs of really, really low cost decline for solar and wind, which are now the cheapest forms of electricity. So we see, even going out into the future, massive renewable energy growth. But there's still kind of this sticky problem of, you see even a certain amount of coal and thermal plants still sticking around the grid even through 2050. And our kind of opportunity space and design space is, how do we really eliminate these thermal plants while still building a fully renewable, reliable, affordable grid for the future? So this is really the design and opportunity space for Form. Even within the US alone, there's close to a terawatt of installed plant capacity today. And this is where we see the market opportunity, not just in the US, but globally. So when you think about the why, or why do you see some thermal plants still staying on the grid? It's really this reliability challenge. And we saw some real life examples of this earlier this year with the polar vortex event that we saw in Texas, where you basically have a confluence of factors that make it hard to run the grid reliably over a few days. It could be, maybe you have a low wind event, it gets very cold, maybe you have gas comes offline, right? And then you have these multi-day periods where you need to run the grid on capacity. You don't necessarily have that. And we see this starting to show up in how utilities plan for the future as they start to think about what these multi-day reliability events are. So some examples that we're showing on this slide include, even in California, you might have some periods of multi-day low solar generation, for example, and you need a low cost form of capacity to ride through those events. Or in the Pacific Northwest, maybe you have a period where you don't have enough hydro generation to last through these events. So this is really kind of the design space of how do you have a multi-day type system that can deliver that low cost capacity through these weather events. And if you want to think about the design space for storage, pumped hydro is the most common and largest form of storage today. Lithium-ion is become increasingly more prevalent. But when you think about how you want to last through these multi-day events, you really want a storage system that lasts for at least 100 hours, and that is at least an order of magnitude cheaper than lithium-ion in terms of today. So if you think about the installed capital costs of lithium-ion, right now we're about $300 per kilowatt hour. That's all in installed kind of turnkey costs to a utility. But if you want to build a new type of storage asset that can last through these multi-day time periods, it's really got to be an order of magnitude cheaper, close to $10 to $30 per kilowatt hour on an installed basis that can last for these multi-day events. So this is really the design space that Form was operating in when we got started. And when we think about iron air as a technology, it's really about how can we really enable that lowest possible cost entitlement of your storage system. So this is something I really like about Form, but we didn't necessarily just pick a technology and then start looking for a market. We really did a broad sweep of what are all the different possible ways that a battery could look like, and what really has the lowest possible cost on an entitlement cost basis. And iron air has actually been around for 50 years, was commercialized by some, by two academic groups in the 1970s. But what Form has really done is taken that technology, which has been around for 50 years, and really re-optimized it and rebuilt it for these multi-day use cases. And in Form in particular, when we think about our format of iron, it's really something that's readily available in the steel supply chain today. So that's how we can get to very, very low cost, which really unlocks this massive market opportunity for us. So when we think about our system, it's an iron air iron air battery, you can think of it as the principle of operation is really around reversible rusting or an air breathing system. So when the battery discharges, we breathe in oxygen. So we have kind of a cathode that faces oxygen and reacts with the oxygen in the air to form hydroxide ions. And then you react that with your iron to form iron hydroxide. And then that process reverses on charge. So then you return iron back to its metallic form, and then you bubble out oxygen. And then that process repeats over hundreds of cycles over the course of the lifetime of the battery. And this is what makes us very excited about kind of the potential for iron air in a utility or grid use case, both on the installed cost basis. So not only are we able to really get to the lowest installed cost that you can have, but it's also really on a safety piece as well. So if you think really simply, the major components of our system are really iron, air, and water. And the electrolyte is an aqueous, water-based electrolyte that's non-flammable. So there's no possibility of thermal runaway for our system. The other piece that's very exciting is the scalability. So iron is the most globally abundant material that's mined in the world. It's also available on every continent, which means that it'll be easiest for us to access that scale and supply chain that we really need to deliver systems like this all across the world. And then the last piece is around reliability. This is kind of building on a lot of the known technologies of iron air systems. We know that this is durable across hundreds of cycles, right? So we're building on a technology that we know is durable and that really has a chance for us to get to very, very low cost. So if you think about the building blocks of our system, it's really how do we build this in a way that's as low cost and as reliable as possible to deliver on these requirements. So I mentioned before, it's really iron, air, and water, right? So iron, this is a format of iron that's already readily available in the steel supply chain, which means that we can kind of write off the backs of all of the existing supply chain that's already supporting the steel industry, and we can use that format of iron to support our battery. So that's kind of the format of the iron anode. Maybe one way to think about it is the steel supply industry. They are maybe the largest producers of anodes in the world, but they just don't know it yet. Our air electrodes are ones that have already been kind of commercially proven and available. And on the electrolyte, it's really kind of a high pH an aqueous-based system, similar to what you get in AA batteries. So the real core chemistry and innovation is as kind of low cost and safe as you can get it. And then all of the additional components that make our battery work. So both the kind of the water distribution systems, the thermal management systems, all of those are kind of commercially available off the shelf balance of system components that allow us to really leverage the reliability and low cost of those assets as well. So it's kind of fun to think about how you build this or what this actually looks like in a grid. So it really starts with a cell. So the form factor of our cells, it's kind of a 1 meter tall by 1 meter wide cell. It's a few inches thick. That includes both the anode, the electrodes, air electrodes, as well as our aqueous electrolyte. So that just starts with the cell. And then we build those cells on the order of about 20 cells together in a series to build up our battery module. So that's on the order of about 1 kilowatt. So if you imagine what that looks like, it's kind of a 1 by 1 by 1 meter cubed box. And that's kind of that core modular building block. And then we build all of those up in, on the order of thousands of modules to build up kind of this turnkey solution that acts a little bit more like a gas plant on the order of, megawatts. What this looks like in the field is this would take up, on the order of many acres, right? A 100 megawatt system that's kind of similar to what we get for existing gas plants today would take up about 50 acres of land. And this is, and, I mentioned this before about it, in a 100-hour system, 100 megawatt system would be about 10 gigawatt hours of capacity. So a lot of capacity built up over these many, many acres. So it's kind of fun to think about, small scale all the way up to the very, very large scales is what we're aiming for to really replace the kind of size and functionality of gas plants today. So to give some visuals to this as well, Form, we really started with proving out that the iron air chemistry worked, right? So just an individual iron pellet, just showing that it worked as an iron anode. That, was earlier in 2018. we've been building and prototyping up since then. And this is kind of where we just kind of came out of stealth mode this year, but all over the last few years, we've been working on kind of building up and scaling up that chemistry, both from kind of a small, subscale cell level, all the way up to those large full-scale cells. So I mentioned that 1 by 1 meter cell system kind of looks like this, and then all the way up to the full battery module. So that's that full DC power building block. And that's quite large. Even just the cell is probably one of the largest anodes ever made, and then the modules is 20 times larger than that. So it's really exciting just to think about over the last 3 years the type of scale that we've built. And then what does this actually look like in the field? So we're driving towards our first utility scale system that will be with Great River Energy. They are located in Cambridge, Minnesota, and that will be coming online in the next 2 years. So we are heads down driving towards how do we really deliver towards that utility. And I could speak a little bit more about why they were really invested and excited about Form since the beginning. And it really just comes down to, for that particular utility, they see a lot of retiring coal capacity in their area, and they were looking for a new form of capacity that could really balance out the wind in their portfolio to basically deliver what coal was doing previously for them. And not to get too geeky about it, but when you think about how we've built and designed our battery products, and also how we think about kind of the long-term value and opportunity of our system, it all kind of starts with modeling what grids really need. So I won't go too much into the details of this, but very simply, we work really closely with our utility partners and with our commercial and industrial partners to really understand what are the option sets that they have today in terms of wind, solar, other options. How much do those things cost? And then how do they build the least cost system that really delivers the reliability and affordability and kind of clean energy goals that they really need? So we built a new software called Firmware. Marco, for one of our co-founders, built it from scratch. But this really has allowed us to make sure that we're building the right battery product, and also kind of working with our customers to make sure that we're delivering on their requirements as well. So to give you an example of how we think about the value and opportunity of our system, I've kind of shown an example portfolio for an 80% carbon-free grid in ISO. This is in the Midwest, where Great River Energy is located. And the problem space for them is, even right now, they might have existing resources, and then they have new resources that are retiring, these coal and gas plants. And the question for them is, how do they really build the least cost possible system that's still reliable and affordable, but also meets these clean energy goals? So the way we think about our system, a multi-day storage system, is one that can still deliver on that reliability while still being very, very low cost. So you can think about kind of the value case of a portfolio with a system like ours, as we're displacing other forms of more expensive capacity assets. And it's fun to think about what a multi-day storage system actually looks like over the course of a year. So this is an example of what an actual state of energy in our system looks like. And it's not necessarily like lithium-ion. I'll show an example of that in the next slide, where you're cycling battery every day, but it's more of we're providing that renewable balancing over all across the year. So here's an example of kind of our energy stored in a battery. In this particular case, we'll see that there's these deep discharges, or we're releasing a lot of energy in kind of a short amount of time over these multi-day events that I was mentioning before. But we're also doing some of that seasonal shifting as well, kind of charging up when there's a lot of wind or a lot of solar available in the grid, and discharging when that's less available. And then we're also providing some of these shorter bursts of energy in these 8 to 12 hour chunks as well. So think of this as kind of a versatile asset that balances out that all types of renewable variability that you get over the course of a year. And with that, we're able to really replace what gas plants do today on the grid. So here's another example, kind of comparing with what we see with lithium-ion today, where you might have lithium-ion, which provides these kind of short bursts of power. It's cycling every day. Whereas for a system like ours, we're kind of providing more of that seasonal, but also multi-day and even monthly cycling as well. And this is kind of a principle as you want to think about it, as we build towards deeply reliable grids in the future. You want kind of an all of the above, right? A little bit of lithium-ion, as well as some more of our systems, to really balance out an overall portfolio. So that was, I kind of did high flyers, happy to talk through questions. I know that we were talking a little bit earlier about hiring, so I will just say just very shamelessly that Form is hiring. Please definitely check out our career page. We talk a little bit more about kind of Form and the opportunities. We're hiring all across the gamut, from engineering to operations, finance, supply chain, kind of you name it. So happy to talk a little bit more about Form, our system, and I'll let us take it from there.
Thank you so much, Annie. That was awesome and a lot of details. And I'm hoping that this deck can be shared with everyone so that we have more time to go into it. And I'm sure with some of the questions, it'll be specific to the slides. Like definitely, I want to know. Like, I'll start off with the first question on if we go back to the battery charge amount or the discharge cycles. Is the battery, I mean, assuming this is the actual charge state from a battery in the field. So sort of in the shoulder seasons, it looks like there's no additional charging going on from the grid or other aspects. You're only using the renewable energy. Like, so it's like the charge state from February to March doesn't really get above 20%, nor in like August to November.
Yeah, if your question is about the why or like what our system is really doing, this is an example of where you have where we're charging namely from renewables, right? And it really just depends on how do you do that in the least cost fashion. So in this particular example, you'll have very, very low cost wind, for example, available in the summer seasons, which is where you want to be charging up with that very, very low cost renewable resource, if that makes sense.
Okay.
Good question.
All right. So should we jump into the other questions? Now we've got the first question. Oops. All right, so our first question comes from Allison. How does the chemical, oh, well, Allison, would you like to ask the question yourself? So I'm not be the only one speaking. If so, Allison, you're up first, and Derek Chung, you're second. So you can feel free to unmute if you wish to ask your question. Otherwise, I'm happy to ask them.
Yeah, hi, hello. Thanks for organizing this. So I don't come from this background. This is all very new to me, but I've been reading a lot about it. And so what I understand is that the levelized cost of storage is really the number that needs to be looked at. And so I noticed that you put chemical cost. So I was wondering how that compares to the LCOS. And then I did put in another question, which was what's the operating life for this battery? So, sorry if my questions were stupid.
Yeah, no, those are two great questions. Yeah, the levelized cost of storage component is an interesting one. That kind of presumes a certain way that we think about how storage might operate. So it's very useful if you think about, say, lithium-ion or other kinds of shorter duration systems that all have kind of the same amounts of inputs. The way that we think about value of our system, it's more about the system-wide value, and that's not really captured in the levelized cost of storage number. So it kind of gets back to this slide. So when we think about value, it's less on the levelized cost of storage, but it's more about at the system portfolio view. What does the portfolio look like with and without our system? And what is the net benefit to the overall utility? What is that delta in cost? And levelized cost of storage doesn't necessarily capture what are the other advantages that you can get at the portfolio level view. So that one, well, we don't necessarily use as the key metric because we think about it from the perspective of utilities, of how they built the overall portfolio in a least cost way. That was your first question. So, and then the second one was around kind of the chemical cost. So when we think about the installed costs, we're really just focusing on the capital costs of our system. So for lithium ion, chemical cost, just the cost of the pure chemical storage capacity is more on the order of $60 per kilowatt hour versus us is more on $1 per kilowatt hour. And I think that gets to someone else's question I saw in the chat as well, which is, why couldn't lithium-ion be, a 100-hour system or something like that? It's not that it couldn't or isn't technically feasible. It's just more of, if you want to get to that 100-hour type duration, you just want to be very, very low cost on an installed cost basis. And that's where just lithium-ion would just get way too expensive to do that. And that's where, iron air comes in. In terms of the why, it's really just because iron is super abundant and very cheap, right? And so that's how we get to very, very low cost. And so for us, it's easy to add additional capacity as you just really add very, very low cost iron. And I think you had a second question around the operating life, if that was correct.
Yes, yeah, the operating life.
Yeah, so these systems are designed to really be kind of similar to gas plants, right? So 20 to 30 years in the field.
Awesome, thank you. It's very exciting.
Thanks, Allison. Derek, are you there?
Yes, I am. Can you hear me?
Yes.
Excellent. Hi, my name is Derek. I've been in the energy storage industry for about 5 years now. One of the big concerns with, I guess, the developers who we sell to is auxiliary power loads. And so I'm just kind of curious, I noticed you said HVAC is required in the system. And I was just curious what aspect of this battery requires HVAC?
Yeah, it's really about kind of managing the module temperature in a way that's kind of optimal for system operation. What's interesting about iron air is you can actually run them a little bit hot. Of course, you want to still manage within that overall optimal temperature. So the HVAC system kind of both supports kind of cooling when you really need to, if you're discharging on a very, very hot day, as well as some heating that you might do in very, very cold climates, which is super important when we think about those extreme reliability cases where it gets to very, very low, very, very cold temperatures. You want to prevent your electrolyte from freezing or something like that.
Great. Thanks, Derek. Ed, it's not really a question, but you say you have a question about market integration and bidding strategies.
Yes, hi Annie. Thanks for the presentation. I'm down in Melbourne, Australia, and please remember me to any of the old Acquion crew, Ted, Eric, and the gang.
Oh, cool.
Because I'm also an alumnus of that organization. So say hi to them. So I kind of wanted to turn the sort of previous questions on the head, because we down here in Australia, we've got a nationwide energy market, no capacity component, fairly sort of standard sort of bidding system here, and you've kind of presented this in kind of a utility portfolio view. We don't really have that here, so I wanted to understand your approach to market integration and bidding, and what are the sort of opportunities, the gaps in an energy market system that you think you can plug, and the strategies for extracting most value in a market-based system.
Yeah, and maybe I'll turn that question on its head. It's really about how do we align markets to build what we really want or what we think is really important. And that's kind of why we wanted to start with the portfolio level view, which is how do you build a least cost system? And then the question is, how do you build the energy markets in a way that reflects that value? I think, one piece really comes down to defining capacity and what capacity really means, and and what you mean by, if we talk about clean, reliable, and affordable, how do you define what that clean capacity requirement should look like to enable that kind of reliability? So that's where we see kind of a big opportunity for market design and build up. And this is why we spend a lot of time with our team kind of working with market regulators to talk about what that future might hold.
And but in a world where one couldn't necessarily influence the market, suppose the context in Australia, we have a lack of desire for evolution of regulations. We have a situation where a lot of renewables are getting built, and they're getting curtailed because they're on parts of the grid that don't have access to capacity, and all of these kind of things here. So there's an opportunity there for sort of technology like yours to play in that market, but without the ability to influence. So I guess the sort of you've got a certain amount of energy in the system. What's the sort of the basic set of rules that would, or the basic set of conditions that would say to an operator, I'm going to dispatch, I'm going to hold, I'm going to charge? Kind of three kind of decision points there, because the sense I get is that the opportunity cost of a dispatch is quite high, because replacing that energy takes time. It's a slow technology. It's not going to provide regulation like a lithium-ion battery can. So, yeah,
it's a really interesting question, which is how would you optimally dispatch a system like that in different markets? And it really just depends on what are the types of events that you want to plan around from an operator perspective. At a high level, where we expect that to really look like is probably holding states of charge at certain points of the season where you might expect these kind of multi-day events to happen, with some kind of optimal dispatch week to week, depending on what you expect the future forecast to look like.
Yeah, and I guess the flip side, how do you stop a lithium-ion battery eating your lunch in that situation? Because they can bid in faster if they've got. Are you really just waiting till they are tapped out, and then there's an opportunity for form, or is there something else that you can do to get ahead of the competition in that market?
Yeah, and we really see the lithium-ion and a kind of an iron air type system being very complementary in markets, if that makes sense. So and I think that the question is really, how do you build both kind of a reliable, low cost form of both kind of renewables plus lithium-ion plus a system like ours to bid into a market? So it's an interesting question, but there's slightly different use cases. Ours is less on the kind of the energy arbitrage value within a day, but it's more kind of managing across these seasonal type variability.
Thanks, Ed. Gonna have to stop from any further follow-on questions to the one question. But appreciate it, and thanks for joining again. It's probably the earliest in the day for you than for any of us.
It's lunchtime. It's a good moment. So there you go.
Great. Surabhi, are you online? And then Alva after Surabhi. Oh, Surabhi's sound is giving trouble. Okay. Can the batteries be vertically stacked so that they take up less acreage?
Yeah, it's such an interesting question. For us, it's all about how do you build the right system that delivers the most value for that particular use case. On a fundamentals basis, our first product is on the order of 2 megawatts per acre, but these are really designed in a modular type system that allows us to stack these 3 high, which would allow us to get to closer to a lithium-ion type power density. And that's something that we certainly expect to be building and exploring in the near future.
Awesome, thank you. Alva, are you there?
Yes, I am. Thank you.
Great.
Hi, Annie. It's great presentation. I almost come at it from the opposite perspective from Ed, being in California and working with the CAISO and also with the renewables goals. California, seems to me that the renewables goals impose constraints in a sense that have to be met. And so I'm in a sense, there's not really a need for the cost reduction. It's a question of whether the battery provides a capability that can't be provided in another way. But I was really curious as to what was really the source of your repeatedly stated need for a 10 times cost reduction, and whether it was just because ultimately you're doing 10 times less cycling of the battery, and therefore you have to recover something over that duration. Is that really the concept there, or what other things come into the need for the cost reduction on the battery technology?
Yeah, it's really if you imagine that you want to build a complementary set of kind of a lithium-ion type short discharges of energy with, a very, very long duration type asset, you really want the installed costs to be 1/10 cheaper, because otherwise you're just kind of closer to lithium. You're more competitive with lithium ion. So it's really about how do I build the least cost affordable system? And it's really one that if you have kind of one end acting a little bit more like a peaker plant and the other end acting a little bit more like a baseload asset, you want those installed capital costs to be at least 1/10 the cost.
But essentially, what you're basically saying is by being that much cheaper, you can lithium ion could do the job, but you'll be able to get in under them at that price, essentially, to get to what point you're competitive with lithium ion is sort of the view.
Yeah, and it's a kind of a nuanced point as well, because it's you really want a little bit of both. So not so much that they're competitive per se, but it's more of if you were to build, if you take as a agreement that you want to have a type of asset that lasts for multiple days, you could have something like lithium ion do that. It would just be exorbitantly expensive for a utility to do that. So if you want to build an overall affordable cost portfolio, that's where you want to get at least 1/10 on the installed cost basis.
Awesome. Thank you.
Thank you.
David, get your question.
Hi, Annie. So I'm guessing that you're getting a lot of questions related to how iron air compares to lithium ion. And so this is somewhat similar. I was just curious with whether there are any second life applications. So we're seeing that lithium ion batteries from EVs are being repurposed for different types of uses once their rated capacity is no longer good for vehicles. Is there anything that the iron air cells and modules that are being developed by Form, can they be repurposed to be used in something else once their rated capacity is no longer suitable for utility grid?
Yeah, it's a really interesting question. In terms of the fundamental components, right, these are certainly recyclable. You can certainly reclaim the iron at the end of life and use it either for other use cases within the steel supply chain, or we could potentially reclaim it for ourselves, right? It's really just kind of a cost value trade-off. It is different than lithium ion, where because that molecule is so much more valuable and expensive, then that recycling use case looks a little bit different. But there certainly are end of life or reclaim asset opportunities for both the iron anode as well as the electrolyte, and then all the rest of the components, the module, the plastics, etc. Also all the electronics can be reused and reclaimed as well.
Thank you.
Awesome. Mark Harnett, you want to answer yours? Ask yours.
I wasn't quite clear on what the advantages are of lithium over yours. Why doesn't the iron air completely replace the lithium ion?
Yeah, it really just comes down to both kind of a cost and efficiency trade-off. So if you imagine lithium ion provides kind of that intraday cycling, the kind of easy arbitrage value for a system like ours, it's very, very low on the installed cost basis. The trade-off we make is really around round trip efficiency. So for lithium ion, you're closer to 80, 90% round trip efficiency. For ours, it's more like 40% round trip efficiency. And that's really that's really the trade-off that you want to make as well, right? Is if you want to get to very, very low cost.
Okay, got it. And then I'm going to sneak in another one while I'm off mute, playing with my train background. There was an article a couple of days ago about powering freight trains with batteries. Could a Form Energy battery power a train?
Yeah, it's an interesting question. In the transit space, energy density, or kind of your how much your battery weighs, matters a lot more. For systems like ours, the iron and the electrolyte actually weigh quite a bit more than you expect for kind of lithium ion. So I think for a transit type application, not at least in terms of our first applications.
So trains can take a lot. I think they said it was 140 tons. No, that's not right. Anyway, it was a huge amount of weight for a train car. Yeah. Interesting. Okay.
Great. So we got Nick Morley and then Mark Henley. Hey, Mark. Good to see you again, buddy. And then
hi there. Sorry.
Yeah, and these may be the last two. So
Well, hi, another one from Australia. So thanks very much for having us. So my question was a little bit similar to Ed's, but just focused on the business case. And is it Form's view that the business case can stack up in energy-only markets just from, delivering power at times when it's extremely scarce, or is it your view that some form of capacity payment or system security payment is required?
Yeah, and it really just kind of depends on the nuances of the market itself, right? And what those events look like. I think in just an energy only space, there's less of a value. It's more of how do you actually make sure that you're compensating the right assets to deliver that capacity value as well. Kind of in all of the above. You could see extreme examples of that. I'm not actually super aware of how the Australian system works today. But for example, as we saw with, example like the Texas polar vortex event, where you have very, very high electricity costs, can you prevent against those types of events as well? So it really just depends on the types of market dynamics that you want to plan around and how you want to plan around for those accordingly.
Sure. And while I got you, have you considered sharing a connection point with lithium-ion batteries as well to kind of take advantage of the balance of system infrastructure and get that intraday cycling capability built in as well?
Yeah, I mean, on just a siteability perspective, we can certainly be sited or interconnected anywhere. And we certainly are looking either at a kind of co-located with lithium-ion or other kind of renewables, or just as a standalone storage asset on the balance of system for our particular use cases or product is different than what you would expect, than what you would need for lithium ion. So it's less of a kind of fully all in, iron air plus lithium ion all in under one roof, but more that these are kind of modular assets that could be co-deployed anywhere.
Cool, thank you.
Yeah, thanks, Nick, and welcome. Mark, see you, my friend.
Hey, good to see you. Thanks, Annie. This is really, really exciting. I guess I'm just curious about how you make the decisions on when to actually discharge your batteries. In real time, are you sort of planning this weeks ahead? I'm just thinking about the huge disparities in timescales that you're talking about here, where you're like making decisions about keeping the battery state on a seasonal basis, and yet at a certain point in real time, you have to decide, okay, this is now the time to discharge the battery. Like, how do you kind of keep all that straight and just like make it manageable? Seems like I've gone to similar meetups for how, say, STEM decides to make their decisions about discharging their batteries to limit sort of peak load, and it's a super complicated algorithm and all these things that are going on. And now you're talking about yearly timescales and models that have huge uncertainties over those timescales. Like, how do you make sure that you're not just solving an unsolvable problem? Like,
yeah, it's a really good question. And for us, it's really about kind of working with our partner utilities and those who kind of dispatch these assets and think about how they would want to use and dispatch a system like this. There are other pretty good parallels in how people operate things like pumped hydro, which also manages across seasonal timescales. And also while kind of managing the system across these like multi-day reliability events. So there are good constructs out there. And for us, it's really about kind of working with utilities to make sure that we give them the right information about our storage system so that they can dispatch it appropriately over the course of the year.
Gotcha. Makes sense. Thanks.
All right. Annie, there's 2 minutes left. If you have a hard stop, we will call that good. There are so many more questions. We could talk for hours, but want to be respectful of you making any other appointments that you have. And just thank you again. If you want to offer tours, I know a lot of people would want to come and see what you're working on. If there's things to see, if it's just an office and computers, they would still just like to come and talk. But thank you. Yes, this recording will be available. We'll put it up on YouTube and make it available, and I'll share the link again. But any last words?
Yeah, just wanted to say thank you for having us. Form we're growing a lot, kind of like I mentioned, even in the last year, we've kind of tripled an employee basis. So I'll just kind of reiterate the openness for folks to check out our career page and see what roles we have available. And of course, don't hesitate to reach out with questions as well.
Thanks, Annie. May I share your email or LinkedIn with everyone as well?
Yeah, feel free to share my LinkedIn.
All right, great. We'll drop that in the chat as well for everyone. Annie, once again, thank you so much. Thanks to Forum for making this battery. Very excited to see it hit the market and help accelerate the transition away from fossil fuels towards renewables. So with that, I'll stop recording.